All right, let's talk about something that hits home for a lot of business owners, cash flow. Specifically, how you can unlock the cash that's already sitting inside your business, hiding in plain sight. We're going to dive into a tool called structured finance, and I promise it's way simpler and more powerful than it sounds. If you run a business, I'm guessing this looks painfully familiar. You do the work, you send the invoice, and then you wait. 30, 60, sometimes 90 days for money you've already earned. It's a really frustrating cycle, isn't it?
Well, if you feel that pain, you are definitely not alone. That whole waiting game is a huge reason why there's a $5 trillion funding gap for small and medium businesses around the world. That's the massive scale of the challenge we're talking about today.
So what's going on here? We call it the SMB cash flow trap. It really gets to the heart of why the old school way of getting money, going to the bank, just isn't working for so many of us anymore, especially in this economy.
And you don't have to take my word for it. Just look at the numbers. Before 2008, banks approved about 23% of these smaller commercial loans. But today, that's dropped all the way down to 18%. And this isn't just a blip. For 13 quarters straight, banks have been making it tougher and tougher to get approved.
And look, this isn't happening in a vacuum, right? Everyone's a little nervous about a recession, job growth is up and down, credit is getting tighter, and customers are being a lot more careful with their money. It's kind of the perfect storm that makes getting a traditional loan feel almost impossible.
But what if you could just bypass that whole frustrating system? Well, you can. It's time to talk about how to unlock the cash that's already yours. It's a smarter, faster, and way more accessible alternative to waiting on a bank.
And this is it. It's called structured finance. Now forget the fancy name for a second. All it is really is a toolkit that lets you turn things you already own, like your unpaid invoices, your inventory, your equipment, into cash right now. It's about the value of your assets, not just your credit score.
This really breaks down the difference. The old way is all about your credit history, your tax returns, which means you wait forever and you get rejected a lot. The new way, structured finance, is all about how good your assets are. That means you get your money in days, not weeks, and approval is just...
Okay, so what's actually in this toolkit? Let's open it up and look at the core tools that you could put to work for your business, maybe even today.
For most of us, it really boils down to two main things. You've got asset-backed loans. Think of these as flexible credit lines that use your inventory or equipment as collateral. And then you have invoice financing, which is exactly what it sounds like, getting cash right away for the invoices your B2B customers haven't paid yet.
And the process for invoice financing is so simple. Step 1, you just invoice your client like you always do. Step 2, a lender gives you 80 to 90% of that money, like immediately. Step 3, your client pays the lender when the invoice is due. And Step 4, you get the rest of your money minus a tiny fee. That's it. It's that clean.
Now you might hear this term thrown around, cash flow waterfall. It sounds super complicated, but it's not. It's actually a good thing for you. It's just the order of who gets paid. And because the lender is guaranteed to get paid first, their risk goes way down. And you know what that means? Lower rates for you.
So here's how that waterfall actually flows. When your customer pays that invoice, the money first goes to pay back the lender's cash advance. Simple. Next, the lender's small fee gets paid. And then finally, all the rest of the profit flows right back into your business account. Clean, predictable, done.
Okay, this all sounds great in theory, but is anyone actually doing this? How are real businesses putting this stuff to work? Let's look at some actual examples.
Yeah, this isn't just a concept. There's a manufacturer in the Midwest who used invoice financing to buy $300,000 in new equipment and hire more people. A retail store used an asset-backed loan to get all their holiday inventory without the owner having to sign a personal guarantee. And my favorite? 10 different trucking companies actually pooled their assets together to get a $1.5 million loan at a crazy low 6% rate. This stuff really works.
Of course, it's not a silver bullet. You have to look at both sides. The pros are huge. You get cash in just a few days, the funding grows as your sales grow, and you don't give up a single percentage point of your company. On the other hand, the fees can add up, and sometimes your customers might know you're using financing. It's a trade-off, and you just have to decide if it's worth it for you.
So this brings us to the big question. Is this right for your business? Should you make the leap? Well, to help you figure that out, let's run through a really quick 5-question quiz. Just think yes or no.
Question number 1. Do you have unpaid B2B invoices that add up to $50,000 or more? That's generally the number where this kind of financing really starts to make sense. Question 2. Think about that waiting period we talked about.
Are your customers typically paying you in 30 to 90 days? If so, that's the perfect window where this can solve a huge problem.
Number 3 is about your business itself. Have you been around for at least 6 to 12 months, and are you making over 100 grand in yearly revenue? Lenders just want to see a little bit of a track record.
All right, question 4 is a big one. It's about your customers. Are they reliable? Do they have a good history of paying their bills? Because remember, the lender is really betting on their ability to pay that invoice.
And finally, number 5, the bottom line. Are you okay with paying a small fee, usually between 1 and 3% of the invoice, to get your cash now instead of waiting a month or two? It really comes down to what that speed is worth to you. Okay, let's see how you did. If you answered yes to all 5 questions, it's a total green light. You are a prime candidate for things like asset-backed loans. If you got 3 or 4 yeses, you're still a really strong candidate, and invoice financing is probably the perfect place to start looking. And if you got less than 3, no worries. It just means your best move right now is to focus on building up those receivables first.
So, let's end with this. You did the hard work. Your business earned that money and built those assets. That cash is sitting right there, locked up in your invoices. So after all this, the only real question left is, what are you going to do about it?